Welcome to this explainer. We're jumping right in today because we've got a massive topic: how to actually make money in the stock market. Turning your everyday cash into real, lasting wealth doesn't just happen by accident. If you ignore the basic mechanics, you're just going to end up chasing random tips and losing your hard-earned money. But if you set things up the right way, will you position yourself to ride the wave of long-term economic growth? Let's get into it. Picture this: taking a starting investment of just $500 and over time watching it grow into 50,000 or even $500,000. Sounds crazy, right? Like something out of a movie. But honestly, it's not Hollywood fiction at all. It's just a mathematical reality when you let compound growth do its thing over a long enough period of time without interrupting it. Now, you might be thinking you need to hit the jackpot or time the market perfectly to see that kind of massive growth. No way. Building sustainable wealth isn't about luck at all. It actually requires a proven strategy and some serious discipline. That is the real secret sauce of how the pros build actual, tangible wealth. Okay, let's move right into section 1, from luck to strategy. We really need to lay down these foundation mechanics. At its absolute core, investing in the stock market is just buying ownership in a business. It's really that simple. When you buy a stock, you're hitching your wagon to that company's engine. So as they sell more products, increase their earnings, and grow, your money grows directly right alongside them. Moving on to section 2, 3 ways to earn. Let's look at exactly how we build that wealth. The first way is probably what you're most familiar with: capital gain. This is the classic strategy of buying a stock at a lower price and then selling it later when the value goes up. Basically, you're looking to buy things for less than they're eventually going to be worth. Then we have the second way, which is dividends. I love this one. Instead of having to sell your shares to make money, mature, profitable companies actually share a portion of their hard-earned cash directly with you. It's basically passive cash flow just for owning a piece of the business. And the third way? Well, this is the real heavy hitter: compounding. This is the absolute bedrock of generating massive wealth. It's the mathematical magic where your money generates earnings, and then those earnings start generating even more money. Over a long time frame, this creates a wild exponential growth curve. All right, section 3, the smart investing playbook. Let's talk about taking a disciplined approach. You can't just go out and buy random stocks and hope for the best. Quality absolutely matters here. You have to actively choose strong businesses. We're looking for companies that are already highly profitable, have rock-solid business models, and show a really clear path for future growth. That's how you give your money a secure foundation to multiply. Now, what about the risk of buying at the wrong time? The secret is investing regularly. Don't stress about trying to perfectly time the market's highs and lows. If you deploy your cash systematically, meaning you buy when the market is up and you buy when the market is down, you naturally smooth out that bumpy ride and lower your average cost over time. You also absolutely need to balance your risk, which means diversifying. Don't put all your eggs in one basket. Spread your money across entirely different sectors of the economy, like technology, banking, and healthcare. That way, if one specific industry takes a hit, your whole portfolio doesn't go down with the ship. That brings us to section 4, mastering investor psychology. We're getting into the mind of the investor now. Honestly, your biggest enemy in investing? It's usually yourself. Our emotions totally mess with our returns. Fear is going to push you to panic and sell your stocks way too early, while greed will trick you into having major FOMO and buying all the wrong things at exactly the wrong times. It's a harsh reality check, but most people fail in the market not because the math is hard, but because of their behavior. People get desperate for quick overnight money. They blindly follow random stock tips. And the second things get a little bumpy in the economy, they just completely panic. So how do we fight that? By treating investing as a lifelong skill. You've got to put the work in, read books, pay attention to how the market actually behaves, and most importantly, learn from the mistakes you are inevitably going to make. Because trust me, we all make them. Finally, section 5, the patient investor. This is all about creating actual wealth. I like to think of the stock market exactly like going to the gym. If you lift heavy weights for just one day, you get 0 results. You're just going to wake up sore. But rigorous consistency over years, that creates a total transformation. The market is exactly the same way. Short-term price bumps are just noise. Consistent, patient investing is what actually builds wealth. Ultimately, please don't gamble. Invest smartly. I always go back to this legendary truth. The stock market is basically just a highly efficient device that transfers money from the impatient right into the pockets of the patient. So I'll leave you with this question for the end of our explainer today. When it comes to your financial future, which one are you going to choose to be?